Hi everyone. For those of you who don't know me, my name is Sasha Pilch and I'm the co-founder of NYC FinTech Women. We have about 370 people RSVP for this event, and I looked at the data and 30% of you are not currently NYC FinTech Women members. So just to give you a quick overview of our organization, our mission is to connect, empower, and support women to advance their careers in fintech. And we do that through a number of initiatives. We have held over 53 events at top fintech companies like Adyen, Plaid, Stash, as well as traditional enterprises like Silicon Valley Bank, Google, Deutsche Bank, and this is actually our third virtual event. We have other initiatives such as Hire Her, something that we started during the pandemic because there were lots of women who had unfortunately been laid off and lots of companies with great VC backing that were hiring aggressively. So we were able to make those connections. So if you look at our site, you can see companies like Betterment, TransferWise, and Uncork are all hiring. And so I'm very excited about today's panel. I've been wanting to work with Uncork for a while now. They're a really hot company, so I'm happy that they get to explain what they do. Plaid is very dear to my heart. I worked there before I moved to Ramp, and HSBC is my old world as well. So I'm very happy to bring all these pieces together and hear how they are partnering in order to excel innovation. Okay, so over to Radhika, who will moderate.
Thank you, Sasha. A very good evening to all of you. Hope you're all staying safe and sane in these unprecedented times. I'm Radhika Gandhi. I'm the Head of Talent and Technology Co-Lead for NYC FinTech Women Group. And today's discussion is all about the importance of partnerships and how we can leverage these partnerships to reduce the time it takes for products and services to reach our customers. We innovate to simplify the lives of our customers, but what good is it if it cannot reach our customers as soon as possible? We have a great panel here today that is experienced in building these partnerships to increase the time to value for products to reach our end users. We have Jane Tran, who's the head of solutions for Uncork, and Julie Overdorf, who leads financial institution partnerships for Plaid, and Jeremy Balkan, who's the head of innovation for HSBC. With that, I'll dive right into the questions. Thank you so much to all the speakers for joining us today. I'd like to first start with a round of introductions by the panelists about what their companies do. If you can provide an example that'll help us understand the function of your companies, that would be great.
Great. So Uncork is challenging the way that we think about enterprise application development through no code. Using a drag and drop platform, we're building things from medical underwriting to transactional processing in the fraction of the time and cost. Most recently, we've been working on a number of initiatives related to COVID, including a PPP loan application in partnership with Deloitte, Plaid, and DocuSign. And we've also launched a number of initiatives in New York City doing meal delivery and virtual marriages. So today, we've actually delivered over 20 million meals across New York City, so we're really proud of that.
Thanks, Jane. That was really helpful. Jeremy, do you want to go next?
Thanks, Radhika, and hi, everyone. Hope you had a good Tuesday. We're HSBC, one of the largest banks in the world. Thank you to the many colleagues and customers who are joined in for this fantastic session now. In terms of partnerships, and I lead partnerships within my role as leading innovation for the bank, and we've done probably 12 of them in the last 3 or 4 years with companies like SoftBank, Samsung, Google, Avant, Amount, and others. I mean, I philosophically believe in partnerships. It's the way forward for our industry. It's the way forward for the world. And candidly, we all share the same customers anyway, so we should be working together because customers just want the best experience. And there's no excuses for our industry, traditional banking to fear the outside world. In fact, that's what we should be embracing. So couldn't be a bigger proponent or evangelist for partnerships.
Thank you. Go ahead, Julie.
Okay. Hi, everyone. Nice to meet you all virtually. So a little bit about Plaid. At its core, Plaid helps you, an end user or a customer of a financial institution, connect your financial account to an app or a service that you want to use. A great example of that, one that most people are familiar with, is Venmo. So when you want to link your bank account to Venmo, say you're signing up for the first time, or if you want to add a new bank account to Venmo, Plaid is the technology in the background that allows that to happen in a consumer permissioned and secure way. We power a lot of other use cases too. One that's near and dear to my heart right now, because I just went through the process of getting a mortgage, which I think, absent some innovation, is rather painful. So one of the use cases we power is really digitizing that process. And so I just went through a flow at my lender that uses Blend, a Plaid customer, and it was seamless and wonderful. And I think easier for the lender too. And as Jane mentioned, we've been thinking a lot and doing a lot as it relates to COVID. We built a brand new product to distribute PPP loans to small businesses in need. So that's an example of some of the use cases we power. We also, at our core though, are an ecosystem player. So we're getting consumer permissioned data to an app that needs it, but we also work really closely with financial institutions and banks, not just on accessing that data, but also helping them develop their own connectivity strategies. And we just launched a new platform called Plaid Exchange that gets to exactly that.
Wow, this was really helpful, from virtual marriages to managing a whole pandemic to mortgages. I think these examples really helped us understand what each of your companies do. And moving on to the next question then, as we all know, banks are usually challenged in creating new technologies and platforms because of a lot of regulation and the associated cost that comes with it. So can you give us some insight into your experience in leading the charge on digitization through partnerships with these large enterprises? And I'm curious to know about what works well for your company and for your clients and what doesn't. Jeremy, do you want to kick this one off?
Sure thing, happy to. So I guess, when I started in my role in 2015, talking through this concept of partnerships, was a radical concept. And every time I'd speak at a banking or industry conference and talking about the value of partnerships would make me the least popular person in the room. I guess fast forward 5 or 6 years, and thankfully it's a different room now, and where people embrace partnerships. But what I would simply say is, you're right in terms of the level of regulation, but also you think through, where fintechs tend to misunderstand or underestimate banks is banks through the regulatory landscape. To use a soccer analogy, it doesn't matter how good the game was. If one goal gets through, then you got regulatory challenges. So if you think through the nature of IT, for example, or the IT organization in most big banks, it's essentially they're there to play defense, not because they don't want to play offense, but because that's the sort of the regulatory baseline that the bank needs. And then of course, IT is a big organization. Every cost center for the bank is under pressure. So it's hard to expect them to play defense and offense at the same time. So that's why partnerships are so important. And one of the things that's been really good, if I can just finish on this point, that's been great about this, to the extent there's been anything great out of this COVID and lockdown crisis from our perspective, is that whereas some partnerships would take, to get the paperwork done, NDA signed, due diligence, takes, months and years. We've done stuff. I mean, there was one thing we did early on, which took us I think it took us 2 weeks, which normally would have taken us, 6 months. And my point when we did that was, well, why does it have to take 6 months ever again? These things should only take weeks, not months. And so I think the one thing I would say is, and I just encourage all of you in your organizations, whatever you do, to the wonderful guests we have is, and the attendees, is when this is over, don't adopt the old ways of working, right? If
Right.
your organization has proven that you can do things fast and expeditiously during this crisis, there's no reason why you can't continue that. And absolutely with partnerships and onboarding, vendor due diligence, there's no reason why this stuff should be taking months.
It's I want to point. So when we talk to our clients, we usually target the business, right? Because we're saying that, like, you know, you as a client, your value proposition should be spent on whatever your competitive advantage is. You shouldn't spend it on all this like sort of noisy technology that you're never going to specialize in anyway, right? So that's really easy to bring in like a partnership or a third party, because most of the time when we come in, we're replacing, you know, large programs or large processes, right? So that's when we can put in like an e-signature, a Plaid, you know, anything like that. I want to point out something that Jeremy mentioned, like there's a shift definitely in the industry, not just because of COVID, but I think people's sort of risk appetite sort of changed, not just at the corporate side, but also in the fintech side. I think now a lot of fintechs and a lot of technologies that are coming out do think about security first and at the enterprise grade. So I think that the barrier to entry has changed on both sides.
Yeah, I think what you just said, Jane, really resonated with me, and I'll get to it in a minute. But at Plaid, I think when we think about partnerships, particularly when we're working with financial institutions around data, it's all about like keeping our mutual customer or the end user consumer at the heart of what we're doing. And I think to your point, Jane, like that means like best in class security practices. And it also means like a maniacal focus on the customer experience and the impact we're going to have by whatever partnership we set up with a bank or a financial institution. I think anecdotally, and kind of what you said, Jeremy, about how it used to make you the unpopular person in the room, we used to really have to convince banks that they should work with Plaid such that their customers could have access to some of the apps and financial services or digital services they were interested in. And now it's a little bit the other way around, where banks are coming to us and saying, hey, we need to be supported on Plaid. So our customers can access the services they need. And I think the partnership is actually in service to making those mutual customers happy. And from my perspective too, for the financial institution, it's making the customers ultimately stickier, because then their bank has facilitated their ability to do what they want, to manage their financial lives. So that for me has been like a shift over the past few years that's been really interesting.
Yeah, that's great. It's really true. Like the shift in the landscape that has happened thanks to the pandemic has accelerated innovation that would have otherwise taken years together. And now we're seeing it happen sooner and sooner every day. And I really hope we don't go back to old ways. So talking about like all of your experiences and hearing from it, I want to understand that I'm just wondering if you've noticed any particular trends in your industry that are noteworthy. For example, like we spoke about no-code application development for large enterprise-grade software or security-first mindset. Those just seemed like distant dreams just a few years ago, but now they're a reality. So in your experience, what are some of the trends that you've seen that are truly noteworthy?
We've touched on COVID quite a bit already and how it's dramatically impacted every person and every company too. We've really seen an acceleration of the adoption of fintech at Plaid. I mean, a lot of bank branches by necessity were closed, which I think accelerated a move to digital financial services, which has been happening to a degree, but we expected to take years and instead happened in a matter of months. So that's been really interesting. I think the other thing too is we're starting to see a more like inclusive view of what financial services means. So it's starting to include actually what historically would have been like fintech players that are separate. And now it's a bigger umbrella we're starting to see, which is pretty cool. And I think an example of that is some historical in the PPP program, just as one example, which has been a really cool trend.
Yeah, I think we've seen something very similar to Julie. You know, just being in no code in general, it's like new, but it's old. You know, no code's been around for a while, but I think it's only really recently been starting to take seriously now, just because of the complexity of the use cases that we're seeing. And similarly, I think just everything that happened with COVID just sort of, you know, tested how fast we can really go. You know, historically, I would say, you know, probably takes a year and a half to drive some, you know, some really decent adoption. But, you know, now I've seen some of our clients, like, you know, the growth rate's like over 100%. And then even with our stuff with New York City, it took about a week to ramp up from like 60,000 to, you know, over millions of users that are coming in through this thing.
If I could just sort of compliment something both Jane and Julie said about adoption, and you know, just to take a slightly tangential view, if you think through how customer behaviors have been forced to change during the pandemic, not necessarily by choice, forced to change through, you know, just the lockdown, right? It's forced every single business and consumer relationship to be digital. So we've seen, for example, there's been various studies done through this pandemic around, you know, just digital adoption rates, and there's various estimates, whether it's 5 years of adoption, 6 years, 10 years of adoption that's happened in 2 months, 3 months, 4 months. And if you think through, you know, that old saying that I grew up with, you know, back in Australia, which was, you know, it takes 21 days to form a habit. Little did I know there's actually some science around this, and a study out of Europe that actually says it takes on average 66 days. That's on average. The easy things and the hard things, on average 66 days. Well, this is my 105th day inside. So I'm almost 2 times the 66. The point being is, what are those habits, both as a worker, as an employee, as a team member, any more than as a consumer? What are those habits that have now been formed that will be almost impossible to unform? Okay, so that I think comes through, we should all consider, because we don't know the answers in many cases, we have some hypotheses, but point being is, what are those behaviors that will not change? And that includes adoption rates, new technologies, the expectation of you. Julie mentioned customer experience. You know, it's a cliche, but it's absolutely true. And in many ways, it's an arms race for customer experience now. That's one thing that COVID's absolutely proven. If you didn't have a robust digital capability, digital servicing capability, you know, forward-thinking, dare I say, innovation strategy going into this, good luck trying to compete when everything's in lockdown. So these are really important things to consider and to think through in all of your organizations and how you're going to be impacted, for better or for worse.
And I think it also changes, to add to what Jeremy mentioned, even your like, you know, maybe your aggregate distribution strategy. We've seen this a lot in insurance, right? An insurance company will say like, oh, we can't cut off the distributor because we need them to sell to these people. But now that they don't have a manual, you know, a manual sort of fallback, you know, that adoption rate just went up, right? So that, like, you know, the hypothesis is sort of true, right? So then how do you sort of keep that and not just give it back to your distribution channel, and then, you know, maybe keep that, you know, relationship and that go-to-market strategy a little bit, you know, more direct. So it really does sort of rethink the way that a lot of our clients are thinking about, you know, how they engage with the customer and actually who owns that relationship at the end of the day.
This is, yeah, that opens up a whole different line of thinking for me, and I'm sure for a lot of people who are listening on this call. Thank you so much for sharing that with us. Now we'll move on to the section where we have some questions from people who RSVP'd, and the first one is about capital markets. So what do you see as the biggest driver of innovation in capital markets today?
It's sort of the same thing that we've been chiming in on. It's really time to market. We've been working, you know, with a very large institutional company that, you know, they've been trying to build this thing for a number of years. It goes through, you know, traditional development cycle. You know, it goes into this machine. It comes out to be something you don't want, and then, you know, user experience is never a thing. So a lot of what we're talking about, you know, with a lot of our clients, and especially in the capital market space, we're doing things in like FX holdover and like client onboarding. It's really like, you know, how can we iterate very quickly, get something to market, to see that, you know, sort of production grade thing, and then just keep moving on. And it's everything from the usability to the data.
Yeah. Thanks, Jane, for sharing that. The next question again goes back to the challenges that we spoke about for large enterprises, but this one's like more focused towards understanding the realistic picture on the ground. So what's the realistic adoption speed for large enterprises, and what is the highest penetration that you've seen at a large customer in the course of a year? That obviously might have changed now with the fast adoption rates, but getting a good idea, a good sense of realistic situation on the ground would be very helpful.
I'm happy to take that, Radhika. So I'll give you two extreme parallels. We did a partnership with a company called Avant, or they're now called Amount, out of Chicago. From the first meeting, literally the first meeting to like launching, took us 2 years, almost to the day. And considering we built a lending platform with them, including all the due diligence, all the contracts, all the legals, all the risk management, all the everything, that was, amazing for a bank. But it was still 2 years. That's a lot of time in this world. Amazing for a bank. That being said, contrast that with the example I mentioned earlier, which was actually with Apple, because we announced it recently, so it's on the record. That took us, the best part of 2 to 3 weeks. Point being is you see a spectrum there. And I think, just given where the world is, I think that it's just not sustainable to take so long, because customers, you're competing in real time. Customers want to be served when, where, and how they choose. That's the new expectation. That was the old expectation, by the way, but that's just what lockdown and digitization has just now created a baseline. So there has to be a rude awakening within all corporate America, candidly. It's not only about banks, it's like corporate America and Fortune 500 companies to embrace the outside world. And just candidly, just think through the cost-benefit analysis of hiring thousands of people, competing, with the best technologists and the best developers and the best engineers who chances are already building something or working in their specific field, to get them within a corporation. It's incredibly difficult. The opportunity cost of partnership, the speed to market, the scalability, the best in class, it's a no-brainer. And I would just encourage any more skeptics out there to realize the new reality that we live in.
Yeah, this is very helpful. Like, learning about things on a spectrum always helps understand where we stand, actually. Jane and Julie, do you have any thoughts that you'd like to share on this?
I think it's the same thing like that Jeremy mentioned, the things that we've been talking throughout this conversation. I think a lot of people are having, sort of a come to Jesus moment with adoption. So, again, it's speed is really it, right? It's like, because speed drives cost. And then if you can like get that value immediately, like, why not? But what I would say though, is that there still is a bit of a balance, right? Because I would say that we've, a lot of people tried to chase, this pandemic in terms of the business sold. And I think that does put in a lot of perspectives, like, what is actually a reasonable time to deliver. So there is like some work-life balance things that, are with that, but it does put into question, like, did you really need to spend 3 months thinking about requirements? Like, if you can finish it in a week and like deliver 2 weeks afterwards, that's great. But again, it's similar to what everyone else mentioned so far.
Thanks, Jane. The next question I have is a very simple one. The answer to that, I'm curious to know. If you had only one piece of advice for women in tech, what would that be? Julie, do you want to take this one?
Sure, yeah. So maybe this is for women who aren't quite in tech yet, but what I would say is that I joined Plaid about 2 years ago. I came from Charles Schwab, and this was my first entree into being in a tech company, being in a startup. And I think there was, and at the time I was living in the Bay Area, and there was a lot of intimidation or trepidation around oh, can I do that? I've never done a tech startup before, you know? And I think all very normal feelings, but not worth it in the end. Like at the value the experiences you have, and the reason you're being hired or were hired is because your company recognizes that. And so just having confidence in that fact, and don't be intimidated at first like I was.
In similar vein, I was lucky enough to sort of come into Uncork very early and just see it sort of, grow into what it is today. So it's been really interesting. But I think the biggest thing is like, you don't have to be a technologist to be in tech, right? Not everyone that works in a tech company is like hands-on keyboard coding. So, and I think a lot of the things that you learn, within, a corporate job actually sets you up even better for those roles, because a lot of startups, and a lot of there's a lot of things that you get in a big company that you don't get in a small company, but those tools that you learn in a big company are really useful, like project management, like how to communicate, like all of those things that you didn't think you needed to go through in your 2-year analyst program are actually very useful at a startup. So I do think it's, I would say, like, if you want to try it, if you're comfortable with, that level of risk, just do it and just try it. Because like, if you're, again, you don't have to be a technologist to be in tech.
For whatever it's worth, if I'm permitted to give some counsel, my thinking is, firstly, you've got to network when you don't need to network. So think about it. By the time you need the network, it's too late if you don't have it. So you've always got to be networking. So just really simply network when you don't need to. And that's why, by the way, doing things like this is so important. That's why it's such an honor for me to participate and see so many friends and make new ones. This is a fantastic. I just wish it was in person. But the other thing, but then the sort of the derivative of that is also, you have to prove value. You have to be valuable in your life. It doesn't matter whether it's in your day job or your personal life, your friendships, whatever the case may be. You've got to find that edge, and that often, is hard to define. But find your edge, and that creates value. Once you've got value, once you become irreplaceable to the extent you can be, and that'll take you through your career. I've seen it time and time again. Every time I speak to a mentee or give career advice when I'm asked, you've got to find your value. And for everyone, it's different. But that's what you should that should be what you think about every day. Not think about what your job title is or your compensation. They're important, but just think, like, how can I be valuable today?
This has been really helpful. Thank you. All the advice was very different from each other, and that sort of like just adds more value for us as speakers. I'll now move on to the next section because I want to leave some time for audience Q&A. So I'll hand it over to Elsie for Q&A.
Perfect. So for our first question, we have from Daywana. Do you want to go ahead and ask your question?
Thank you. Hi, everyone, and thank you all thank you to the speakers for the lovely discussion. I had a question. So I'm a senior consultant within Deloitte, and I know a lot of my clients have usually a trouble of with the rise of this, partnership model and this ecosystem of partnerships. They have trouble in managing the different partnerships that they have, in eliminating, the risk of dependencies, and just maintaining all of these partnerships throughout the life cycle of all of the solutions, and also at the same time giving kind of a seamless end-to-end experience to customers. So I wanted to just understand from you, how do you recommend, organizations such as banks should tackle that, or is there anything that your organizations do to actually help banks manage all of the different partnerships that they have?
If I can answer that, I'd be happy to. I would just simply say very quickly, Dawina, thank you for the question. It's a good one. The way we do it, because often the amount of emails I get from just LinkedIn alone of vendors or potential companies who are like, hey, Jeremy, I've been trying to meet with these 57 people in HSBC and they're all the wrong ones. I spend 10% of my time literally just putting them in touch with the right one if it's not me. But the point about a partnership is the intention of the partnership is not to be a partnership, it's to become BAU ultimately, because you're working on a new product or service, marginal or incremental improvement. So you want that to become business as usual. So generally how we do it, if the relationship hasn't been originated through me, for example, which often it is, once that BAU state comes through, is I let the business or function ultimately own the sort of operational piece, but I may maintain the relationship level, and then have others from the business become part of that from a continuity standpoint. But I think it shouldn't be an obstacle for having a partnership strategy by thinking, wow, no one knows how to manage this, because I think that's just another sort of illusion that we place in front of our eyes to just not do them. I think it's a combination of both. It's going to work differently in different places, but that's how we've done it. We've learned many lessons from doing it that way versus alternatives of just passing the partnership to somebody else. Then you have all sorts of other problems. But keen to hear how others have done it candidly so we can improve what we're doing.
Perfect. And for our next question, we have Zoe.
Hi everyone, I'm Zoe. So I currently work in business development, and we're a fintech player within the portfolio management space. So curious to know, what are some of the key things to consider when you first building out a partnership engagement model at a smaller firm? Thank you.
Oh, so I can take it. So a lot of the things, out of your traditional sort of legal things, right? Thinking about, how, the company uses your technology. That was something that, was really key to us. Like, if they're changed, I don't know what your technology is, but if they can change your technology, who owns the IP, where are those rights, what are those guardrails? And then also thinking about, the terms of, that partnership agreement. Is it a reseller agreement? Is it something else, right? So like understanding, the different medians by the different modes by which your, technology can be sort of manipulated or used, and then how you want to think through either monetization or, just greater partnership goals you have on that.
Perfect. And another question we have, and Jeremy, this one might start off with you, and then Julia or Jane, if you want to take over. But how does partnering with a fintech versus working in-house benefit or hurt a large financial institution?
Thanks, Elsie. I think, and there's a couple of things I wanted to add on to Jane's question, just answered, but I'll do them together. I think it certainly adds significant value. I think I addressed it slightly earlier, but I'll reinforce it, that the cost, the speed to market, the opportunity cost, doing it in-house. It's almost every time partnership is a more efficient, prosperous, quicker outcome for the bank. The way we think about it is what I call the 3 Bs. And forgive me, I'm an Aussie, I'm not the smartest, but build it. It's how banks or corporate Americans always try to do these things. If they couldn't build it, then they had to overpay for something or buy it. And I just call borrow. That's my borrow. The B is really the P, partnership. It always works out to be best to borrow it, to partner. The thing I would say earlier, that Jane, to the question Jane just answered, but I hope it's relevant for this too, is one of the biggest piece of advice for any sort of technology company, whether they're big or small, who's trying to partner with someone like us. I often meet great technology, great platforms where I just have to say to them, listen, we're not the right people to work with you. And that's because I'm trying to save them time. Time's the biggest blessing we have in this life, so I don't want to waste it for anyone. And also candidly, because sometimes massive organizations kill a startup. It's not the right time to just want to work. You want your company to evolve to a certain point where they actually can deal with a massive organization, and the complexity and the compliance requirements and all the other things that come with that. So think through really, really smartly, like when is the right time to partner with whom. And then the other thing is also I get approached a lot by companies wanting to talk to us, and just pro tip for those out there is when you read about a company doing a partnership, if you're one of their competitors, it's probably not the smartest thing to do, because you'll get rejected to then say, hey, we read about what you did with one of our competitors, can we talk? when you just spent years doing this deal, like you only need, like, there's only so many slots on the roster. So, and I say that not for any other reason, because I want to save you time and increase your success. And I think just think through, it's less a numbers game and be much more laser focused in who you want to talk to, find the right person in that organization, and find the right organization for you in the evolution of where you are as a company.
Any other comments on that one from the panelists?
I would echo what Jeremy said, like being on the other side of it. I mean, the partnerships that my team is doing is a little bit different, and they're data access related typically, but Plaid as a company is doing different types of partnerships with FIs and banks across the board. I think what's common is that if you don't have someone on the other side of the table who's like equally motivated to get it done, it's like you're wasting your time. And that's a big lesson I think we've all learned. You need to find someone who wants it to happen just as badly as you do, to be the shepherd internally to get it done, which is one of my biggest lessons, I think.
Can I just compliment what Julie said, if I may? There's something else that's really important, is not only finding the right person, but oftentimes it's a total coin toss probability of whether you find the right person or not. But she's absolutely correct. But the other thing I would say is, don't assume that when you pitch in that first meeting to big bank or big Fortune 500 company, that they have any idea what you're even talking about. And I mean this really sincerely, because often folks who work in technology are some of the smartest people, and you're often trying to sell, and I mean this in a literal sense, like not trying to sell a product, you're trying to sell a vision for this grand, like the next, product service improvement, when often the company's problem is so rudimentary that you almost like go, is that the problem that you want me to solve? Like that, we could do that in our sleep. And so what I mean by that is to think through and never assume that the big company has a clue what you're even talking about. Always ask yourself, like, what's the problem I'm trying to solve? What's the problem they're trying to solve? Not to scare them with how great your technologies are, because you will. That's not necessarily a bad thing. Just to save them that for like the fifth meeting. The first meeting, just try to solve the problem. And then you'll find the right person.
Perfect. And then for our final question, we actually have one of our co-founders, Michelle.
Hi, everybody. Thank you so much for the panel today. One question I just wanted to ask was, when you think about the right fit and the right partner, what are some of those elements that you're looking at? Are there, say, like a top 5 list of key attributes of a company, either big or small, that you look at from a partnership standpoint?
Any takers on that one?
If no one else, I'm happy to share them. I think the first is, what's the problem we're trying to solve? The second is, is this going to improve our scale, reduce our cost to serve? What's the revenue or efficiency dividend going to be? And I think finally, albeit probably it's the first subconscious question you answer with, is, do you actually want to work with these people? Are they just good ethical people? Are they going to get the job done? Are they going to do what they say they're going to do? Are we going to be, at least in the bank's case, because we deal with regulators all the time, and believe me, the regulators read the news, they read the press. So when you partner with a fintech or a technology company, if you haven't already told them about it in advance, they're like, oh, who is this company? So always think that how important that is. That the values question cannot be understated, especially in the world we live in right now. Ethics is worth triple what it used to be, and lead on ethics as far as I'm concerned. If you want to partner with some big places or small places or any places, just lead with the types of people that you are, because you're going to spend so much time with each other through this process. Most of it good, but some of it won't be. But if you want to work with the other people and vice versa, that'll put you miles ahead of everyone else.
Yeah, I fundamentally agree with that. In my role, I sit on the institutional side of things a lot of the time, and it really comes down to the people, especially when it's two similar products, especially also in early stage companies. like at that time, you're also buying in the founder's vision, the employee's vision. You know you're going to be working together closely. So that always has a, solve my problem, but then also I want to work with you every day going forward as we help scale your product and you help make us faster.